Hello, and welcome back to the Association of Corporate Treasurers and our Festival of Treasury Transformation. I'm James Winterton, an Associate Director for Policy and Technical at the ACT. And over the next 55 minutes, we will be discussing central bank digital currencies, or CBDCs. You may have seen last month that the G7 finance ministers and central bank governors published a joint statement on CBDCs and digital payments, in which they highlighted that innovation in digital money and payments has the potential to bring significant benefits, but also raises considerable public policy and regulatory issues. The G7 went on to say that if issued, a CBDC would complement cash and could act as a liquid safe settlement asset and as an anchor for the payment system. So, is it now time for corporate treasurers to take central bank digital currencies seriously? What are the other recent developments in the CBDC space, and what may these mean to financial professionals? What are the risks and benefits associated with CBDCs? To discuss these questions and much more, may I introduce our panel of CBDC experts. Jonas is a project manager researching CBDCs at the Frankfurt School Blockchain Center, and he's kindly standing in today for his colleague, Philip Seindner. Jonas chairs the Digital Euro Association, and he is also a member of the expert panel of the European Blockchain Observatory and Forum. Chris Ostrowski is the Global Head of Public Sector Engagement at cLabs, working on Cello and Mobile First Blockchain. Previously, Chris was Managing Director of the Digital Monetary Institute. And Diego Ballon Ossio is a Senior Associate at Clifford in their financial regulatory practice in London, with a focus on digital assets, crypto assets, and the development of policy around CBDCs. But before I turn to our speakers, just a few inevitable housekeeping points. We will welcome questions from you, the audience, via the Q&A box next to the session window. All questions are kept anonymous, and you'll see me checking my screen from time to time, and we'll try to cover your questions as we go along. The session is being recorded and will be made available for replay on this festival platform from tomorrow until 14 days after the event. Since you're interested in CBDCs, you may want to listen also to the recording of an earlier session today entitled Announcing a New Era for Payments. There's a virtual discussion forum which allows you to share your comments with fellow attendees, and you can join the ACT's active LinkedIn groups or tweet using the hashtag ACTFTT. So let's start the panel discussion by asking each of our speakers to explain briefly their perspective on how they approach the topic of CBDCs, and then to consider what is a CBDC and why are central banks around the world considering digital currency projects. Turning first to Jonas. Jonas, why are you interested in the topic of CBDC, and how is the CBDC differentiated from, say, Bitcoin or stablecoin and synthetic CBDC? Jonas, over to you.
Thank you very much, James, for having me and also for the first question. So I think CBDC is indeed a topic that is relevant for everybody, right? So we are today addressing the topic of the treasurer who will deal with CBDCs, but this will also be a form of money that is available to everybody. So you can pay groceries with it, you can pay in the supermarket, right? So this is something that really is important for everybody. So this is why I think everybody should deal with it. And this is also why we at the Digital Euro Association also analyze potentials and risks, as we, for example, discussed today, because this is an innovation ongoing that will impact all of our lives as soon as this currency might go live. Yeah, but back to your question, what a CBDC is. And I think here the term is actually pretty good because it's a digital currency issued by a central bank. So this means it is not physical as cash, but digital. And it's issued by the central bank. And this is like the key difference to, for example, a bank money we have today, right? So the money we move when we pay via mobile phone, via credit card, etc., because this is issued by commercial banks. And a CBDC, in contrast, is issued by a central bank. And this also gives the CBDC a lower risk dimension because a default of central banks are very, very unlikely, while banks, of course, could default. And this is also situations we have seen in very severe crises recently. So I think there is not various things that have CBDCs and Bitcoin and stablecoins in common. So I think the only thing that is similar is that it's digital, but it's, from my perspective, a completely different topic, addresses completely different use cases. And I'm happy to talk more about this within this discussion.
That's great. Thank you so much, Jonas. And turning next to Chris. Chris, what's your perspective on why central banks are seeking to develop CBDCs And who are the intended users of the CBDC? Are corporate treasurers included?
Thank you, James, and thank you, Jonas, for your thoughts and for the introduction there. So for most of the past few years, I worked at a London-based central bank think tank. And this central bank think tank covered all sorts of macroeconomic issues. And then at the end of 2018, beginning of 2019, we were contacted more and more by tech companies, by big tech companies, by crypto companies, crypto exchanges, who we had previously had no contact with. And it became obvious after a while that the central banks themselves, though they were quite slow in responding to this, became more and more interested. And to the extent that the kind of sort of vortex position was probably in early 2020, late 2019, early 2020, when three things happened at once. First of all, China's pilot of a CBDC was publicized. It was discussed. The launch of this pilot CBDC was something which garnered a lot of interest for geopolitical reasons and also from a currency point of view. The second reason was that Bitcoin became very valuable. It was never out of the news for one reason or another. And some mainstream organizations were using Bitcoin in a way that they never had previously foreseen. That is a big deal for central banks, because if many economic participants are outside the normal monetary system, then the tools that central banks have to respond are diminished. It wasn't a huge number, but it was enough to make them sort of accelerate their thinking in the area of central bank digital currencies. And thirdly, and probably the most important element, was the announcement by Facebook that they were going to have this Libra coin, which is now called DM, which was going to be a privately issued currency, which in a very simplistic way, Facebook users could use all around the world. You've got 2 billion people using a privately issued currency. And then obviously there was speculation that Amazon might do the same. And this accelerated even further I suppose the kind of fear of what would happen. Central banks have not had their business model threatened as the kind of single issuer of a sovereign currency for hundreds of years. And so this is the first time that the single sovereign issuer has had some sort of competition. And there's also the fact that other countries might be doing it. This led central banks to start seriously talking about their central bank digital currency projects. And when I was at my former employer, they discussed many of these with each other and with some of these private sector participants. In September of this year, I moved to cLabs. cLabs is the software firm that serves the Celo blockchain. And this is a cryptocurrency outfit which is what I'm endeavoring to do is to bring the existing financial players into the crypto ecosystem so that a CBDC and stable coins can operate in a way which makes sense for the economy as we know it. In terms of the intended users, James, I mean, you can probably split it between emerging market and developed market countries, and you can probably split it between wholesale CBDC and retail CBDC. These are the kind of two different sets of categories that we often focus on and we often talk about. Particularly when you're looking at a retail CBDC in an emerging market country, the end user is the person in the street. It's more of a substitute for cash. Think of the pounds and pence, the actual notes and coins in your wallet, as the best substitute for that. On the wholesale side, there's a lot of interesting work around settlement and interbank settlement that will be of interest to corporate treasurers. So the most obvious use cases are kind of either ends of the spectrum, but as Jonas said, they do affect everyone, and we can go into the use cases in more detail throughout this session. Thank you.
Chris, thank you so much for that. And actually, I think someone prompted by your remarks has put in a question saying, given the complexity of public policy debates on CBDCs, is there a risk that other digital payments such as stablecoins could be adopted more quickly? So I'll offer that one up to Diego. And Diego, with your perspective as the legal expert on CBDCs, perhaps you'd like to start with the comment of or question of, are CBDCs just another form of money?
Thank you, James. Yes, I mean, as a lawyer, this question around characterizing things is always close to my heart. So I always try to find the category and try to deal with it in the way the law does. It depends is a typical lawyer's answer, and I'm going to give that same answer for this one. it depends on what you regard as money. Is it used to, if you think of money as something used to settle payment transactions or payment requirements to settle debt obligations, then it can be if both parties accept it. If you think of money as, you know, an accepted currency that's been issued by a, you know, formal central bank, and you essentially are thinking of legal tender, then again, it depends on whether it's been established by law as legal tender. And this is sort of one of the first stumbling blocks that we encounter when we think of CBDCs. This question about what is it, and whether if the intention is for it to be something called retail CBDC that's meant to replace, as Chris was so eloquently putting it, the coins and the pounds in your pocket, then it needs to be money, and it needs to be designated as money under the law. If, on the other hand, the intention is simply to settle debt obligations, it doesn't necessarily have to be legal tender. It can be an asset, a third kind of asset, which would operate to settle, you know, for example, securities transactions, or which could operate to settle, you know, other things. And I think to the point that you were making earlier, and to the question that was posed around the use of stable coins, you know, if you think about it, stable coins are fulfilling that role of settling debts, because people will accept stable coins as a form of payment for any outstanding obligation, but nobody necessarily recognizes them as legal tender. Not so far. I mean, we've heard of El Salvador, but you know, if you think about USDC or Tether or other coins, the question as to whether they are money, for some people they are, and especially for the crypto fans, they will regard those stable coins as effectively money.
Diego, that's really helpful. Thank you. And so we've heard a bit about why central banks are investigating CBDCs. But I have to say, I've quite often heard it said that a CBDC is a solution looking for a problem. And personally, I'm still not clear, why do we as end users actually need CBDCs? So maybe if I can go back to Jonas, and conceptually, what do you see as the real potential benefits of CBDCs, Jonas?
Thanks, James. And here I can give a similar answer than Diego did. I mean, I'm an economist, so also here it depends, right? So it depends on the country, it depends on the payment landscape, it depends on the how financially included people are, right? So it's really not possible to give one answer for every jurisdiction. But what we see, and here again, I would like to differentiate between the classes of countries also Chris differentiated. This is like advanced economies and developing and emerging market economies. And in developing and emerging market economies, it's very often about getting payments more efficient. So to decrease the costs of remittances that are today still very high on average. It's also about financial inclusion, so getting people onboarded and included into the financial sector, right? Because this is really social issues that are apparent in these countries. But when we now turn to advanced economies, the situation is different. And actually, in some countries, I would agree with you, James, to say that CBDC is a solution looking for a problem, because, for example, in the euro area, we just don't know what the use case is. So there are some ideas about establishing monetary sovereignty or regaining this, because cash is decreasing in importance. So central banks want to play a bigger role also in this ecosystem where crypto and stablecoins are more widespread, right? But so this could be a use case. But honestly, what the use case of, for example, a digital euro is formal for retail CBDC is, we just don't know. And this is also why the ECB started the investigation phase of the digital euro project to kind of figure this question out within the next 2 years.
Thank you, Jonas. And so, Chris, I'm trying to think of a question where you can't reply by saying it depends. And what I was struck by is when you mentioned China and its trial, if I remember rightly, that was mid-2020, soon after the COVID pandemic really hit. And if I remember, it was the same week that China was trialing the sort of CBDC. The USA was sending out the first of its paper checks of, I think it was $1,200 each to taxpayers for COVID relief. So you had this sort of contrast going on. So for an end user, is the benefit principally about remitting payments more efficiently?
The China example is very interesting, and many of us have been watching it very closely. It's difficult to get all the information, but from what we do know, it seems to be more similar for the end user to their current system than it might have to be. It's a more of a similar experience from what we can tell. So the e-yuan, which is the CBDC of China, is not based on blockchain. It's based on a more conventional technology. And as far as we know, you use your bank that you bank with to administer the e-yuan. So when you come to pay for something online, pay for something in the shop, you go onto your phone, you can either select to pay with the commercial money in ABC or ICBC Bank, or you can pay with the e-yuan, but that payment process is hosted by your deposit-taking bank. So it looks like it's a fairly sort of similar process. So you do think, well, okay, how is this going to drive adoption if it's just such a similar thing in terms of the actual day-to-day management of the phone? Why would anyone use it? And in truth, I think the Chinese government have offered incentives for people to use it. Some people understand it, but it's generally used by the sorts of people who were quite savvy making electronic payments anyway. So what was the point of it? Why was it done? I suppose there are a couple of different things about this, and these are all quite political points, really. But if you look at the sort of payment landscape recently in China, there were two big players, Alipay and WeChat, who had a huge amount of data and information on who was spending what where, and everyone had one of those two apps to make payments. And this is something that I think made the Chinese government think, well, if we had one of our own, then this is the type of information on payments and on the sort of economic information and all those sorts of things that they would then have to hand. The Chinese People's Bank of China always talk about the levels of privacy that they've built into this system, but I think some of the reasons for doing it may be more to do with the Chinese payments landscape. That's one of the things that the People's Bank of China have previously spoken about. So I think what we really want to see is, if you're going to have a CBDC, what is the technology and what is the use case and what is the experience that makes the biggest difference? If it's going to make a big difference, whether it's the US government issuing some sort of programmable money that you can spend as a form of sort of Keynesian stimulus, putting money in people's pockets during a crisis, then that's an interesting use case. We can see why that's being done and how it works. If it doesn't make a big enough difference and you're dependent on end user adoption just through choice, then that, I think, is where it might struggle, particularly in developed countries where there's already a payment system in place. So this really goes back to what Jonas was saying. What is the use case that people want to achieve? If the design is effective enough for people to use it with the sorts of privacy they're comfortable with, if they can buy more products more easily with a CBDC, then this is a good thing. If a central bank has a kind of an economic dashboard so they can see how money is being spent, they can monitor economic activity more easily. This is a useful tool that central banks often complain they don't have at the moment. So that would be another useful tool. And so when you look at all of these sorts of things, you can see how it could make a massive difference, but the design and the technology and the adoption are very important, because you could just have an experiment there which doesn't make much difference. And that's one of the things that everyone's looking at the existing cases of CBDCs to see how much of a difference has been made.
Thank you, Chris. And you touched on privacy in the context of the China example. And Diego, I'd like to go into a bit more detail on the legal and governance risks associated with CBDCs. We've sort of had the upside. Like to hear more about the downside, and the G7 statement highlighted a number of considerations such as the rule of law and privacy concerns that Chris mentioned. What do you consider to be the key governance problems with CBDCs? Diego.
Thank you. I think that there are two big buckets of issues. The first issue is what I call the intermediation question. And what I mean by that is this idea of how do you get access to the CBDC itself. So let's imagine that it's meant to be a replacement of the cash and the coins and the banknotes. How would you get people to use it? You need to be tech savvy, but that then means that you will have to get somehow the technology put into people's phones. That needs to be designed, that needs to be approved, and those are things that central banks are quite bad at. Central banks do not design technology that is easy and nice to use and user friendly. So that means that you have to create somebody who intermediates the thing that you're putting on there, the CBDC. And by creating that, you're creating a layer of essentially, a layer of intermediation, which then looks very much to like the existing framework that we've got at the moment. At the moment, we've got banks intermediating the monetary output of an economy. And so if we remove the banks from this thing and we think about, okay, so what's the alternative? How could it be done? It still needs to be some sort of technology that looks at who is being onboarded and that captures all their information and all their data. That combined with the data as to where the payments are going to creates this highlighted problem of privacy and the highlighted problem of being able to monitor what the population is doing, where they're getting their money from. It also raises quite interesting basic human rights questions. So for example, it is already a problem for people who have been through through some sort of enforcement process, have committed a criminal offense or whatever, to be able to bank today. Today, this is a problem. If somebody wanted to go to a high street bank and open an account, and there are prior convictions, this may be a problem to in order to create this, to open an account. And so, if you've got all the data and you need to create an account with the central bank, would you prevent somebody who has prior offenses in their record from getting this? And would you then have to exclude them? It creates this really tricky question around at what level do you set the controls? Now that you've got all the information about people, at what level do you set the controls? So that's, I think, the first bucket. The second bucket is what I recall, what I would sort of call the question around interoperability and how you run the CBDC alongside the existing rails. And that creates some really interesting questions as well, because if you do find a use case where the CBDC is more efficient, more effective, better, would people prefer to use that over traditional systems? And would it be that you go to a corner shop and in the same way that you sometimes get charged to pay for a little bit extra to use the cash machine, would you get priced up if you're using the traditional monetary system and priced down if you're using CBDCs? Would it effectively start creating a parallel price for the use of the CBDCs? And that's a really tricky rabbit hole if you go down that route, because at some point then you think about intervention, some sort of measure of intervention, and how would that look? And it then creates other financial stability concerns that are very difficult to navigate. And maybe Jonas can talk us through some of those economic implications. But there are some really tricky questions to my mind as to how you deal with this idea that you have to coexist within a framework.
I'm really interested, Diego, that this problem of the framework, which of course is designed over many, many years, based on current definitions of money and current ways of paying people. So actually a CBDC would have to interact with a whole load of laws and financial regulation that's based on a different set of premises. So as an example, there was a question that I saw posted in the festival discussion forum earlier today, which was, will CBDCs impose a value delay while they do anti-money laundering checks? So how would something like anti-money laundering work with CBDCs? Because surely the value transfer is immediate.
Yeah, I mean, I think at the moment, I mean, this is not a new issue, especially in jurisdictions like here where you do transfers almost immediately. I think this value delay is the anti-money laundering checks, you would do them at opening whatever intermediation method you do. It's either at the level of the central bank, which is going to enable you to create some sort of wallet, or you need to do it at the level of the intermediating entity, which could be a bank or a technology provider that sits there that is responsible to do the AML checks. And then the question is, where is the money being transferred? And at that level, we all have heard probably of the famous travel rule, where you need to sort of start looking at where is the money going to, is that a hosted wallet, and what sort of safeguarding measures you apply. And it is true, and this goes to the point of being able to operate in parallel, that if you create efficiencies in one of the systems, you must ensure that those efficiencies do not create economic incentives to just, price one use higher than the other, essentially.
Yeah, so on the and thank you, Diego. That's really helpful. On the economic incentives, so I will turn to Jonas, because I'm interested in how a CBDC is compatible with sound economic governance and doing no harm to monetary and financial stability. And you recognize those are words that the G7 used. Also, I'd like to just add in, though, could a CBDC be used in some way for tax collection? For example, the European Union has spent a lot of years looking at a financial transaction tax. Is there some way technically that every time a CBDC is used, it can just skim off part of the value and send it off to a central government? So Jonas, on the wider economic principles, please.
Yeah, thank you, James. I think Diego mentioned the most important issues that could come up, namely the one of financial disintermediation, right? So that you could establish and generate a means of payment that kind of makes, if I exaggerate, the banking sector redundant, right? And this is definitely something central bankers do not want. And I guess this is also why, for example, the ECB discusses limits on CBDC holdings. So the ECB very often talks about, for example, €3,000 account maximum on CBDC, because this would in the end then lead to the fact that the CBDC is only used as a means of payment, right? So when you go to supermarket, etc., peer-to-peer payments, but not as a store of value. And this is where commercial bank money kicks in and would be used. Okay, so I think this is a very severe issue and that central bankers have on the agenda. And secondly, I think also Diego talked about it, is the risk of privacy. And here we also did some interesting research where we suggested a concrete infrastructure and how cash-like privacy can be enabled, right? So how you can establish a system that is, for example, fully anonymous until a specific threshold, and afterwards KYC measures, for example, are conducted. And this is what we kind of tested and presented to central bankers, and it turned out that this kind of worked technologically. So from a privacy perspective, a CBDC can be designed that the central bank sees everything, but from a technological perspective, it can also be designed in a way that like the central bank sees nothing. So that really advanced cryptography is kind of used in the end, and this is what we do as well. Of course, this kind of conflicts with AML issues, but you could, for example, establish like a two-tier system where below a specific threshold, payments are completely anonymous, as with cash today. And if you exceed this, then, for example, KYC is established. But coming back to your question again, James, with the tax collection, I think from a technological perspective, it's totally doable, right? It just depends on which technology you use. Maybe here, if you think about tax collections, it could make sense to use a distributed ledger. We have not talked about technology yet a lot, because then actually some kind of automation could trigger that automatically tax payments are conducted. So from a technological perspective, it's doable. But again, here we are coming back to the benefits and also the use cases. So first, it has to be clear what the goals are, and afterwards, it should be figured out which technology to use and it should be used and how to apply this in the CBDC context.
Thanks, Jonas. I guess most of us, being a little bit cynical, will assume that the technology will be one that enables central banks or national tax authorities to have the greatest transparency over our activities. And I think that's going to be one of the problems of getting acceptance, at least amongst individuals. And there's a question saying that the two related questions, actually, one of which is saying the USA seems to be late to the CBDC discussion. Can they have the luxury of waiting and watching other experiments? And another question, will the Eurozone be able to make decisions on a digital currency on time to be useful? So I'd like to turn to Chris in a second about maybe you can pick up on where different countries are, and perhaps even you want to touch on the Bahamas as a sort of use example. But Chris, what do you think are the latest developments in CBDCs that finance professionals ought to be aware of? And briefly, what's the significance of those developments?
Yes, I certainly think this isn't going to go away anytime soon. I would expect to see more announcements, more discussions. Probably this year, 2021, there's been a real acceleration of press releases from central banks. And there's a wide variety of what's going on under the bonnet. For some of them, it's a very simple request for information so they can write a research paper on what a CBDC might look in their country. In other countries, it's far more advanced. There are pilots, there are test cases. They've already made some policy and design decisions for the test case. They're not for the actual CBDC. The Bahamas is an interesting case. I mean, an archipelago of islands with dollarized with the corresponding banking system wasn't really working that well for people. So it was an idea of being able to get cash into people's hands in a way which drives financial inclusion, because the sort of conventional banking system didn't work very well. I mean, there have been some successes there. There have certainly been a lot of lessons to learn there, and the central bank governor of the Bahamas speaks about this a lot. I mean, I think a small island economy is probably not the best use case when we're thinking about other larger countries, either emerging market countries or developed market countries. But it's very interesting to see what's going on. And there are lots of places where many of the central banks are being quite public about what they're doing. And those that aren't, every time that you see an experiment done, it's always useful to look under the bonnet as much as possible, particularly if there's a side of it linked to trade finance or debt settlement, or the finality of settlement and delivery versus payment. When those issues come in, I can see how corporate treasurers' day-to-day life could be affected. At the moment, it's all still at we're trying this stage. There are some central banks like the Monetary Authority of Singapore and others in Asia which have quite a sort of pioneering view. There are others that are taking a very cautious approach. I think the reason why I think this needs to be done properly, but it can't be delayed too long, is because if you delay it too long, people will migrate with their feet and you will end up having business transactions in Bitcoin. And that can happen. There's actually nothing to stop that from happening. Bitcoin may well be overvalued, it may well be undervalued. If you look at Bitcoin itself, it has been useful for people who wanted to make money out of it. But in its core rationale to be an alternative currency, it hasn't really worked because it hasn't really provided a stable store of value. It's gone up and down so much, it's yo-yoed so much that most people wouldn't want to be paid in it because the value changes so much. And so as a currency, it hasn't quite succeeded in what it wanted to do, but it has some value because it does some things that normal currency cannot do. You can do cross-border remittances with basically no fees at all. It's pseudo-anonymous, so you can transact with other parties in a way which is impossible to track. It can't be copied. You can't fake a coin. It's not possible with the cryptography to fraudulently copy a transaction. And so those things in and of themselves are of some value. They could be overvalued, they could be undervalued, but that's some things that Bitcoin does that current currencies don't do. And when you talk about the timescales for the US and Europe, we do need to be careful that we're not in a situation where first asset managers and professional investors are asked by their clients, please look at Bitcoin for me, I want to put stuff in Bitcoin. And then, the next layer down, individual traders and individual retail investors start looking at cryptocurrencies. And then corporate treasurers, it could be a corporate treasurer on this call, has a client in El Salvador and has to pay in Bitcoin. That could all happen. And if that migration happens too quickly, or if that migration happens without the central banks being ready or taking too long to get ready to respond, to have the sorts of tools that make a CBDC appealing, then the central banks and what we would suppose call good money in the parlance of developed market sovereign currency won't have the same stability, and there won't be the same possibility to intervene by central banks and governments as there is now. So the timelines do matter. It needs to be done carefully, but it does need to be done with an eye on the whole cryptocurrency and stablecoin landscape. The US is an interesting case because it could be that there's a real battle going on at the moment between the stablecoin advocates and the CBDC advocates. Those who think that a CBDC isn't necessary, and if you have a stablecoin that's pegged to US dollar reserves in the same way that bank deposits are, then let the private sector produce a stablecoin and that can do the job. Others think that a CBDC, which is akin to and has the same status as the greenback dollar itself, is the other view there, and that hasn't played out yet. And there are pros and cons on both sides.
That's great, Chris. And I think we're going to stick to CBDCs, but indeed the El Salvador example is interesting and indeed quite colourful. I'm sure many of the audience have read the reports in the Financial Times and other papers recently about how El Salvador is proposing to use a volcano to power its Bitcoin mining. But I think that would be a bit of a distraction for us. And I'd like to go into more detail on the relevance of CBDCs to corporate treasurers. And I'll turn back to Diego first on this, because Diego was mentioning earlier about interoperability and some of those practical considerations for treasurers that go way beyond their treasury management system. So, for example, in the title of this session, we posed the questions: how will CBDCs have an impact on the global payment landscape? Will CBDCs facilitate more real-time cross-border payment capabilities for corporates? So, Diego, your perspective on that, please.
Sure. I mean, we hear cross-border payments as a use case for CBDCs. It's probably the most widely discussed use case. Yet, if you look at there are roughly, I think, 80-something projects around CBDCs around the globe. Out of those 80-something projects, there is not a single one that's talking properly and sincerely about the interoperability capabilities of their own stablecoin and the ability to merge stablecoins. There are some supranational organizations that have proposed this. There is the famous BIS hub, and there's some other policy discussions going on. There are some standard setters that are thinking about it. But if you look at the projects that exist in individual jurisdictions, they're mainly focused on solving their individual jurisdiction needs or use cases. And typically that is linked to some sort of a retail coin or facilitating internal payments. I have not seen a global, cross-border payment solution being offered by a single jurisdiction. And that is quite telling. And I think there is a reason for that. I think the reason is that the issues that you need to deal with when you have to think about the introduction of a CBDC into an economy are such that you want to sort out your house first, make sure that it works for you and for the things that you are responsible for, and you then think about whether you can send it overseas to make payments somewhere else. That's sort of the logic. But I think it then also means that in order for a CBDC being used to facilitate cross-border payments, it needs to be accepted on both sides. And this is where the question around interoperability arises. And I think it is reasonable to assume that some CBDC projects will end up being interoperable with others at some point. I think that is a reasonable assumption, but it is also a reasonable assumption that not all of them will be, which then creates the question, so how do you solve cross-border payments? And is this really the holy grail? I mean, some jurisdictions have already said that they wouldn't allow necessarily non-local residents accessing the proposed CBDC project. And so I think this is where the private sphere comes in, and this is where the private solution can really, add value and act as seize on this opportunity to provide a solution which allows a cross-border usage of CBDCs. Now, that can only be done if governments play ball. So, for example, if we were to, if we think of FX payments in the current space, in the current world, we have CLS Bank that does cross-border payments for some of the core currencies that exist, but that's being done on the basis of somebody taking responsibility for that entity, regulating it, applying certain controls on it, and it's been essentially vetted by a number of regulators and who got comfortable with the idea and it's now operating the way it's operating. I think that needs to happen to achieve cross-border payments with CBDCs. It's probably not the same technology and not the same structure that you need for CLS Bank, but I think you need something similar. You need something that enables the cross-border payments usage and that is linked up to the various jurisdictional legal features of each CBDC project. And here, I mean, if we go down this rabbit hole, you've got questions around what is each CBDC? Is it a token? Is it an account? And what technology is being used? Slightly different. How do you achieve the consensus? There's lots of practical questions around each project, and how do you make them all work together is probably through some sort of hub who is intermediating and achieving this. And I think that's the private sector's role.
Thank you, Diego. I'd like to just turn briefly, we're beginning to get a bit short on time, but just very briefly to Jonas on this question, because I'm interested in your research at the Frankfurt Blockchain Center. Have you looked at some of these practical issues? So Diego mentioned some. I mean, there's the whole issue of how easy is it to convert a digital currency back into regular currency, or if you're using blockchain in different currencies, how do you do foreign exchange hedging in that environment? And indeed, when you get to the end of the year and you have an external audit, how do you actually substantiate what the total value of your CBDCs are? So Jonas, those sort of practical considerations, can you shed some light on them for us, please?
Yeah, thanks, James, for the question. And before I go to this question, I would like to add a few sentences on what Diego already said, because I think it's really important when it comes to implications for treasurers to differentiate again what Chris did in the beginning between a retail and a wholesale CBDC, right? So a retail CBDC available for everybody, and a wholesale CBDC mainly for financial institutions. Why? Because what I would expect, honestly, is in the euro area that the retail CBDC, the digital euro, will be restricted, as I said, because this is something which is currently discussed. And I personally think that there will be a limit on CBDC holdings. So this also means that a treasurer cannot hold as much retail CBDC as it wants, right? But I think where a lot of innovation comes from, this is the wholesale CBDC, right? So this is where a blockchain-based means of payment is provided by the central banks, where you can do really fancy things with it. Is it like delivery versus payment when you issue a bond, right? And settle this directly in a final way with a blockchain. And here, the blockchain is really, really powerful. We see first central banks that look into this, also the Austrian central bank, for example, here in Europe. And this is, I think, besides, today we mainly talked about retail CBDC, but where also treasurers should take a look at, because the wholesale space is definitely not sleeping and also very, very active. And to finally respond to the questions you had, James, so I think when it comes to conversion, it's really essential to have like an easy currency conversion into cash. And here again, it's very interesting to look to China, because in China, there are already machines existing that also convert national and also foreign currency in CBDC, right? So kind of special ATMs. And I think this is a really interesting innovation. And also, of course, it would be a nice and easy way to get it into the system.
That's a fascinating example, and perhaps something that people visiting the Winter Olympics in China will maybe be able to experience next year. So I'd really, now that we're getting towards the end of our session, I'd like to go around all three speakers and really summarize two questions, please, for treasurers. And perhaps if you could do this just very briefly, just a few key bullet points in a minute each. So the two questions are, firstly, what should the treasurer or CFO be saying to their board of directors about CBDCs at the present time? And what should a treasurer actually be doing now, meaning the next 6 months, about CBDCs? So what do you say to your board, and what actions should you be taking? And can we start with Chris, please, on this one?
Certainly. So as a corporate treasurer, I mean, in terms of what you're saying to the board, this is something which has moved remarkably quickly since the beginning of last year. So we were having this discussion at the end of 2019 that I doubt this would have been included on the ACT agenda, for example, and certainly there wouldn't have been so many announcements and such an acceleration in pace. So from I suppose a strategic point of view, Were a CBDC to come on stream, were it to be piloted, then this would be something that a large corporate might be able to have some sort of role in, and it's certainly something that people should be aware of. When we talk about the kind of role of the banks here, we're all three of us here are very careful, because as we've heard, we don't want there to be a system where commercial banks suddenly sort of drop out of the equation, because that's normally a recipe for a serious economic problem. On the other hand, there is an enormous cost-saving opportunity. If you have a CBDC and you have bonds that can be issued directly in payments that have a totally different custody requirement, then you have an opportunity to raise money and to borrow money in a way which you don't at the moment. So it's really worth looking at what is being suggested, particularly on the debt capital market side, and seeing how that can benefit your company. So that's probably what I would do in terms of sort of talking to the board. In terms of what you want to sort of personally do now, there is a lot of good information out there. There's most of these current, I mean, Jonas works for the Digital Euro Association, there's a Digital Pound Foundation, there's a Digital Dollar group as well. And some of the work that certainly we do at Cello is very interesting, because because the CBDC doesn't exist, we're using a stable coin that we've created as a kind of tracer for that. And some of the programmable payments around universal basic income, allowing some of the large multinational organizations to issue bonds on the Cello blockchain. These are the types of technologies that can work. So the more you can read and learn about this, the better. Certainly, the blockchain technology does allow an enormous opening of new opportunities and a savings in costs for the whole financial operation. It is something akin to the start of the internet or something like that in terms of what it can do there. So the more that you can absorb, the better. It often sounds complicated, but it's something that I've immersed myself in the past few years, and I can certainly see the opportunities. And it holds great promise for corporate treasurers.
Thank you, Chris. And Diego, just very briefly, please. So the same.
Very briefly, I think what I would say is tell your board to get involved in the debate. I think now is the time to shape what's going to happen in future. I think these things are not out there, and the Bank of England, the ECB, everybody is thinking about it. So now is the time to put out your voice and make sure that it works for you. I think that's sort of my key message.
Thank you. And Jonas, so similarly, what would you advise the treasurer to tell their board, and what should the treasurer be doing themselves about CBDCs?
Yeah, I couldn't agree more with Diego. So now it's really time to get active, because now you can shape things. And for the ECB, for example, we know for the next 2 years, there will be no announcements, because they will be researching, right? So we do not know even in 2 years what's happening. But the thing is, in a few years of time, so I think in 5 years, CBDCs will be out there. So this means as soon as the ECB, for example, here in Europe announced it, there are just a few more years left, right? And this means treasurers should be prepared. So I would tell the board to really get active, to not sleep when it comes to these developments, because there will be a new form of money out there in a few years. And what I would currently do, of course, here, get active, build resources, get people dealing with these projects. And what I also mentioned previously, not just look at the retail side, but also look at wholesale CBDC, because really these blockchain-based assets and settlements, delivery versus payment, this is really a game changer and could make lives of treasurer also easier when it comes to digital asset itself.
Thank you, Jonas. And I'd like to just quickly squeeze in one more round of maybe sort of 20 seconds each, because there was something Chris touched on, which is fascinating to me personally. He threw in almost casually, Chris, about, is this like the invention of the internet? So it seems for all the talk of central bank digital currencies, there remain a number of technical, privacy, interoperability challenges that we've heard about that will need to be resolved. But assuming those challenges can be overcome, then the quick question I'd like to finish with, please, is how significant would be the development of CBDCs for major currencies? So is it moving the payment style from, say, 6 to 7, or is it moving it from 0 to 1? In other words, is this an evolutionary moment, like moving in communications from the telex to the fax? Or is this more revolutionary, like the invention of the internet? So, Chris, you used that expression. I'll come to you first. Just 20 seconds, please.
If you use the most advanced and open blockchain technology with a secure central bank digital currency, which is open to all players and all innovators, you are opening an entirely new financial economic model, which means that in the same way you can send a picture to someone over the other side of the world in 1 second on WhatsApp, you should be able to send $100 to someone on the other side of the world on WhatsApp. And if that's true for an individual, the technology already exists to make that true for a corporate as well. Because if you have wholesale atomic settlement, then many of the things that cause friction in the current system will disappear. And that will be a 0 to 1 moment in the dial. If, on the other hand, you don't use the type of blockchain technology I'm describing, and it's an acceleration in sort of speed and payments, then it's more moving it from 7 to 10. So the answer really does depend on the technology and on how other parts of the ecosystem advance in the next few years.
Thank you. And Diego?
I mean, I would echo that. I mean, one thing we shouldn't forget is this question around what the private sphere is doing. And I think the development of stablecoins runs alongside the CBDC question. And I think there's a real race between central banks and and private actors that are not necessarily incorporated. They're running a system which is already out there and which people are using. And so I think it is a game changer. I would go with the 0 to 1 analogy. And say, just because, don't forget that central banks are not the only players in town.
Thank you. And Jonas, would you agree it's a game changer or is it evolutionary?
Yeah, I'm very sharp. So I would say blockchain technology and application of blockchain technology, revolution, and CBDC evolution.
Interesting. Thank you. Well, sadly, we have come to the end of our time, and it's been a fascinating discussion. And I, for one, will be monitoring developments in CBDCs even more seriously. I'm very grateful to those members of the audience who kindly submitted questions. We've obviously tried to cover as much ground as possible. And you can watch this and other sessions from the festival again on demand, and you can chat directly with your fellow attendees in the discussion forum. Could I ask you, please, in the audience, to now take a moment to complete the quick feedback form for the CBDC session, which you'll find next to the Q&A box. Your feedback is really helpful in planning future sessions. And in fact, previous feedback led to our recent education series on digital assets and cryptocurrency. So we do take account of your views. And the Festival of Treasury itself continues over the next couple of days. Tomorrow, the day 2 theme is about transformation in treasury operations, including sessions on cash management, treasury management systems, and cybersecurity. But finally, today, on behalf of the audience and the ACT, I'd like to thank our 3 excellent speakers for sharing their fascinating insights on CBDCs: Jonas Gross, Chris Ostrowski, Diego Ballon, Ossio. This has been James Winterton for the ACT. Thank you and goodbye.